Good morning, everyone. Jesse Webb here with Traders Pro. Got a little bit of a head cold, so apologize for the raspiness. But let's jump in here. I want to go through a couple of things really quickly. We've had on our buy-sell ratio, we've had a crossover here. I've talked about this, kind of leading up to that. We're kind of working on this market bottom. And so now we've kind of started to shift the equilibrium. We'll see if that continues to hold, but that turns that buy-sell ratio back above 1. That creates a positive environment for buying stocks. The only caveat to that is we are still in a bear market, so be very cautious that we're still in this big downtrend, but we're also deeply oversold. And so that's a part of this discussion is we're in a bear market, but we're also extreme, which means reversal risk is high. That can happen quickly, that can happen slowly, but I think it's happening here currently. At least the data is showing that that's starting to take place. I talked about the Dow stocks yesterday, and so we're starting to see that. So it's a good opportunity to start, building out the watch list and start looking for stocks that are moving from hold to buy, and focusing on some of those stocks to build out your portfolio and look for a little run right here. We'll see how it can continue. Looking for stocks in leading sectors, which are going to be currently they're still in oil and energy. We haven't seen that move. One of the places to keep an eye on are some of these areas towards the bottom. You might find some value in some of those. One of the stocks that I wanted to show you this morning to keep an eye on that I did pull from the muscle stocks list was this second one right here, VRNA. It's a really good looking chart pattern, a really good looking fundamental. It's a 99 ranked stock, a new buy signal, good solid breakout after a real long consolidation phase. Let's look at the volume on that. Relatively light volume, which doesn't always matter, but in this case, it's a nice looking pattern, nice looking chart. That's one of the things to focus on. I mentioned this last week, or in the last few days, is as it's breaking through, these are areas that we want to steer clear of. We don't want to try and hold throughout this choppiness. We want to focus on these trending moves as they're starting to take place here. So this potentially could be the early phases of that for this stock. Obviously, you never know how it's going to play out, but this allows us to set up a trade. Risk parameters on these, essentially, you can do a couple things. You can set stop losses right below these lows, and this would allow for a real high reward to risk type trade. Now here it's entering into this extreme just because of the strong move here, but it's not deeply into that range. Sometimes when it gets way up into these, as it's starting to move, it can actually stay extreme, which is good if you're in the trade, but if you're entering the trade, you may want to wait for it to pull back a little bit. But this is still pretty early into that range. Again, just a stock to be able to look at today. In terms of managing risk, let's talk about that for just a minute, because one of the things you can do is when you're adding a stock into a portfolio, we could add that stock into in the portfolio builder on the site here. You can just add the number of shares. Let's say that we have, let's say, let's look at it. Let's look at a couple things. Let's say 100 shares. What's the stock at? $11, 100 shares. So we can actually set up our stop price. So if we were to set a stop price just right down here below these lows, we know that if it moves higher than it immediately retraces, there's probably something wrong with this trend, and we don't want to stick around. We don't want to stay in that trade. So that looks like it's about 950. So if we were to add that in here and we look at a stop price of 950, that's going to put our risk in this case. If it's a $100,000 portfolio, we did 100 shares. That puts the risk on the trade at about 15%. The risk of the portfolio is super low, so we could actually add significantly more shares. That's obviously not a very big trade, $1,000. So let's go up. Let's look at $1,000. So it's $11,000. That's 10% of that position. That leaves, in this case, 90,000 cash left. That's just for example purposes. But risk per share, that puts the portfolio at risk about 1.7. That's manageable, between 1 and 1.5% per trade, 15% at risk. What that means is that I've got $1,000, $1,700 at risk of my $100,000 at risk. That's one of the ways to manage your risk and be able to adjust your risk profile to look to see how that is how that particular stock or that particular trade may work out for you on that. And you always want to have your risk profile set up in advance, that you know exactly what your worst case scenario is. Worst case scenario obviously is that it could go to zero, but the probability of that happening are very low. Could certainly have some kind of news and it could gap lower, but in this case a stop loss at these lows, that may be reasonable. If you want a little bit higher stop loss, maybe the low of that bar right here, which is going to be, I'm looking at my little mouse over thing over on the side, the low of that day was 10.17. So if I put my stop price here at $10.17, that's 1% at risk. Now I've got $1,000 at risk, 9% of the trade at risk, which is essentially that entire full green bar. And then from there, it's just managing the exit. As the stock continues to move higher, you can exit on a sell signal. You can continue to hold it throughout that trend, or you can sell it into strength. A couple ideas there for you today, and happy trading.